Good, when the going gets tough, let's do tough as nails. Assume a VAT rate of 14%. Tough as Nails, the sole proprietor, is a hardware and building supply shop operating in the Bold Triangle. A perpetual inventory system is used to control inventory. The owner, Pete Blobel, is focusing on generating sales and is of the opinion that too much time is wasted on administration and accounting issues. On 1 July 2016, Pete caught his floor supervisor removing old computer equipment without permission from the premises. He was subsequently dismissed after a disciplinary hearing found him guilty of theft. The supervisor's wife, Mary, works in the office. She's responsible for the daily banking of cash deposits, ordering of stock, and payment of creditors. No proper accounting system is used, and Mary keeps manual summaries of all transactions that took place. Pete has a nagging feeling, after the dismissal of his supervisor, that his bank balance does not reflect all the income that it should. Tough as Nails is a registered value-added tax vendor, and the financial year ends on 28 February 2017. Pete has contracted you to lodge an investigation to find out whether money has in fact disappeared or not. Mary gave you the following information. Extract of the trial balance for the financial year ending 28 February 2016. So obviously the previous financial year. And then they give you a list of balances. And then they give you information for the period 1 March 2016 up to 31 August 2016. So obviously 31 August 2016. So that is the period where you want to find out whether there was some money missing out of the entity. Now, what we have to do, we have to determine the amount that is unaccounted for in the bank account of Tough as Nails as at 31 August 2016 by using the information after the following general ledger accounts were reconstructed. So they were very kind in this question to give you some leadership, how you should go about in order to find out whether there was any amount of money missing or not. So let's draw the T accounts of the debtors control account, the inventory account, the creditors control account, and the bank account. And let's see what are we going to achieve. After we've done that, we have the opening balances of those accounts. So in our inventory account, we have an opening balance of 280,000 Rand. So if we go to our inventory account, opening balance 280,000 Rand. Debtors opening balance 40,000 Rand. So in our debtors account, there you are, opening balance 40,000 Rand. Bank account opening balance 67,000 Rand. 67,000 Rand. And then our creditors account opening balance 129,500. Go to our creditors account, opening balance 129,500. Then other information that they gave us for the previous financial year is sales and cost of sales. So we know that the difference between sales and cost of sales is by gross profit. So if we get the difference between the two, it's the 7380 less the 4428 gives us a total of 2952,000. Our gross profit percentage then would be the 2952 divided by the 7380, and that equals 40%. So if we want to work out our profit formula, we say, well, then that should look like this. 60 plus 40 equals 100. So gross profit percentage is on the sales, so therefore my sales must be 100, so it's 40% on sales. Good. Now let's take the information step by step. Number 1, cash sale invoices for the period amounts to 2790,720. Once you see the word invoices, you know that VAT is included. We have to work with a 14% VAT. Tough as Nails has always applied the same profit margins on the cost price of inventories up to 28 February 2016 to determine the selling price of goods, going back to our profit formula. So what they're telling me here is that the same gross profit percentage that applied in the past also applies for the current financial period. Peter has decided to give a cash discount on cash sales of 5% as from 1 March 2016. So as from the beginning of the current financial period, if I do a cash sale, he can get 5% cash discount. And the reason for that was to encourage the clients not to buy on credit anymore. The cash invoice amount, so that amount that they gave us, represents the amount due by the customer before any cash discount is granted. Why is it important, guys? It is important if I want to work out cost of sales that I work on the correct amount in order to determine cost of sales. So the first thing that we want to know here is how much money have we received, because we are actually looking after the bank account, because we have to determine how much money was stolen. How much of that 2790720 was banked? Only 95% of that amount was banked, because he granted that cash discount on all cash sales for the current period. So the amount that we have received was 2,651,184. So in our bank account, we are going to debit the amount of 2,651,184 being our cash sales received for the period. But whilst we are here, we might as well work out our cost of sales. Why? Because I'm not required to do the bank or the income statement. No, but I'm required to do the inventory account. And one of the entries in the inventory account on the credit side is cost of sales. So the cost of sales is going to be determined based on the normal selling price, the 2790720, VAT exclusive. So take out the VAT, multiplied by our profit formula, which is 60 divided by 100, which is 60%. So our cost of sales here is 1,468,800. Good. Just keep that one in mind. Let's just highlight that so that we remember that. And there is our cost of sales amount. Good. That was cash sales. Now, credit sales invoices, invoice for the period under the review, amounts to 1860480. That is now our credit sales invoices issued. In other words, it includes that because this is the invoice price. Statistics have shown that 80% of debtors always pay within 30 days to make use of a settlement discount of 2%. So coming back to my bank account, that is really what I'm after. I'm not going to receive that full amount of credit sales that I've made to my debtors. I'm only going to receive for 80% of them 98% of the amount. So guys, let's start there, because you have to write for yourself something in a workable type of format. Let's start with the 1860480. And let's say, okay, here's our 1860480. We're going to break it down in an 80% and a 20%. 80% of that amount being 1488384 and 20% of that amount being 372,096. Now we can further build the puzzle. The total credit losses written off debtors' accounts for the 6-month period under review were 3192. So credit losses 3192. Now guys, we can go and we can post 1860 in our debtors account, because that was the actual credit sales for the period, 1860480. We can go and post the credit losses of 3192, because that was actual credit losses written off. Now, what we have to find out is this credit losses that we have written off, of what debtors were they? Remember, our opening balance was 40,000. Were they some of that 40,000 opening balance debtors, or were they some of these credit sales that took place? And if it was some of these credit sales that took place, was it where does it fit in? All of these debtors were expected to settle their accounts within 30 days period after the debt originated after 1 March 2016. So we have now established it's not part of our opening balance, 40,000 Rand. That means if I go back to this little thing that we have here, from this amount here, from the 1860480 credit sales for the current period, that amount of 3192 was not received, was not collected, and was subsequently written off. Good. All amounts still outstanding on 31 August are still within the 30 days payment limit and amounts to 38,384. So that then forms part of our closing balance. So if we go to our debtors account, we say, well, our closing balance, some of them, 38,384, has got to do with 80% of the credit sales, those debtors who make use of settlement discounts. So we have a portion of our closing balance. Now, going back to this one here, although 80% of the credit sales was 1,488,384, 3,192 of that amount is not going to be collected. So if we want to work that amount back to the amount that we've actually received for those debtors in the bank account, we say, well, 3,192 of those debtors was not received. They say here, all of these debtors we expected to settle their accounts within the 30 days period. That was written off. So that makes that forms then part of that 80% debtors who is expected to settle their accounts within 30 days. So we are going to subtract that 3,192. Furthermore, they say some of these 80% debtors, those who are expected to make use of the settlement discount, 30 days payment limit, are still outstanding at year end, 38,384. So that means we haven't received that money as yet. So included in that total credit sales 1,488,384, an amount of 38,384 has not been collected either for the current year. So the amount that was subject for collection in the current period is then the difference between the 1,488 after subtracting the credit losses, which we're never going to receive, after subtracting those amounts still outstanding at year end, and that gives us a total of 1,466,808. Before we carry on here, let's just see here what they say about our 40,000, our opening balance. They say all outstanding amounts at the end of the previous financial period were received by 31 August 2016. So that 40,000 there in total was actually received. And they say none of these debtors qualify to make use of the settlement discount. Why is that important now? That is important because that means we have received in our bank account the full 40,000 Rand because no settlement discount was granted to them. So in our bank account here, the opening balance of our debtors was received 40,000 Rand. And in our debtors account, that opening balance was received in full 40,000 Rand. Now, it seems as if I'm jumping up and down, but it is important so that I can read exactly what is happening where. Going back to our 80% debtors, so those debtors who is entitled on a settlement discount of 2%, we have worked out that the total amount that was received by them was actually the 1,446,808. But that would have been the amount received if it wasn't for a settlement discount. So in actual fact, that was the outstanding debtors who settled their outstanding balances, but they only paid 98% of that outstanding amount because they made use of a 2% settlement discount. So the amount that we really received from those debtors, those 80% debtors, was 1,417,872. So in your bank account, you can say for the 80% debtors, we have received 1,417,872. And we can go and post it in our debtors control account, 1,417,872. But then remember, if they have made use of a 2% settlement discount, I have to pass that entry to clean out their outstanding balances, because the outstanding balances was 1,446,808. They only paid 98%, so we still have to get rid of the other 2%, the 28,936. And that is the VAT and the settlement discount on the settlement discount and the VAT on the settlement discount that we also have to take out of their books. So there it is, settlement discount plus VAT. It's actually plus VAT, and that then equals the amount of 28,936. Good. Now let's go back to the question. We have now dealt with the opening balance, 40,000, that was the last sentence. We have dealt with the 80%ers. Now what about the 20%ers? The remaining 20% debtors who are not expected to make use of any settlement discounts owe 2196 at year end. So total credit sales 1860480. 80% we have dealt with. We have worked out how much money was receivable from them and how much money did we actually received from them. Of the 20% debtors, we said, well, it is 20% of that amount, but at year end, we still haven't received 20,196. So from the 20% of the 1860 is the 372,096, that amount there. And we said, well, outstanding at year end, 2196. And if that was outstanding at year end, we can add it to our closing balance, 2196. So our total closing balance, 58,580. Then we say, okay, how much have we received then? We have received 100% of that amount after we have subtracted the amount still owed by these debtors at year end. So we have received a full amount of 351,900. So bank would be debited, debtors would be credited with 351,900. If I add those two figures together, it gives me that 176,972. And bank would have been debited with this amount, 20% debtors, 351,900. Good. Now we can also work out our cost of sales because we have our total sales. So if we want to work out our cost of sales, we say, good. What was the total sales amount? The total sales amount was 1860480. But we must remember to take out the VAT to get to the VAT exclusive normal sales amount of 1,632,000. So if we're going to work out cost of sales, it's going to be that 1,632,000 multiplied by our profit formula. Now, our profit formula we've already worked out, and our profit formula is 60 divided by 100. So multiplied by 60% then, in other words, give us total cost of sales 979,200. So our cost of sales 979,200 on credit sales. And then on cash sales, we've already worked that one out, 1,468,800. So we can do that posting to our inventory account, cash sales 1,468,800 and credit sales 979,200. Good. Then we're done with debtors. Let's have a look then what happens further. All purchases are made on credit. Creditors are paid within a 60-day period and no settlement discounts are received. An inventory count at 31 August 2016, end of the period, revealed that the value of inventory on hand was 255,000 Rand. Right, so that's our closing inventory. So we can go and insert that in our inventory account, closing balance 255,000. They tell us that the outstanding balances on the creditors' accounts were confirmed by them individually on 31 August 2016, and that amounts to 180,500. So the closing balance in our creditors' accounts, 180,500. So creditors' closing balance, 180,500. Right, now that is the only information that pertains to inventory and creditors. So let's have a look. What do we have here? In our inventory account, we have our opening balance, our cost of sales. We have, that is not only cash sales, you know that this is cost of sales. And credit sales, that's cost of sales on credit sales. Right. We have our cost of sales, we have our closing balance, so there's only one balancing figure left on the debit side of the inventory account. So when we balance this off, the debit figure, the balancing figure there is 2,423,000. In our creditors account, we have the opening balance, and then we know that this account needs to be, they tell us that all purchases are on credit. So the total balance there represent our credit purchases for the period. So our creditors account cannot be only the 2,423,000. Our creditors account equals the invoice value, and the invoice value will include VAT. So the total VAT inclusive invoice value is 2,762,220. Here I've split it so that you can see inventory is 2,423,000, and then VAT would have been 339,220. In this question, they do not ask you the VAT control account, so therefore you do not worry so much about VAT. But in a question where the VAT control account was asked, you had to post the 339,220 to the VAT control account as well. We also have the closing balance of our creditors. So that means the only thing missing is an entry on the debit side. And what entries happen on the debit side of a creditor's account? Only payments. So our balancing figure here is the amounts that we paid our creditors. They also tell us that there's no settlement discount on creditors. So that means that full amount was actually paid out of the bank account 2,711,220. So in our bank account on the credit side, 2,711,220. Number 4, the outstanding VAT amount payable to SARS at the end of August was 14,950, and a VAT amount of 135,329 was paid during the period under review. So in our bank account on the credit side, we are going to have the VAT payment of 135,329. The debit side of that entry would have been VAT control account. Number 5, you have requested the bank statement directly from the bank. The balance of the bank statement was 1,290,320 on 31 August 2016. The bank reconciliation revealed that deposits of 54,300 Rand have not yet been recorded on the bank statement, but that all other items have been posted and agreed. You have checked all other entries on the bank account of Mary and are satisfied that all other expenses, excluding creditors and VAT, to the value of 597,850 was actually paid in the current financial period. There were no other amounts deposited in the bank account other than sales, and we've already have accounted for cash sales. We've already accounted for the receipts of debtors. So all we still have to account for is other expenses of 597,850. Now guys, when we actually balance off our bank account, we get a closing balance here, balancing figure of 1,083,557. But we know what the balance should be. They tell us the bank statement had a balance of 1,290,320, but the outstanding deposits, which has not been reflected in that balance as yet, was 54,300. So that means then that our theoretical balance should have been the bank statement balance plus the outstanding deposits, 134,4620. Our actual balance in our books is only 183,557. So the amounts that is unaccounted for equals a total of 261,063. So it seems that this guy has helped himself very good in this scenario.